everybody. Good to see you. Thanks for watching. If you're watching us on YouTube right now, welcome. If you're coming in live, be sure to say hi as you come in. This is kind of just to kind of set the stage a little bit. This is a little bit of a more longer form podcast style discussion. We're going to talk about markets. We're going to talk about indicators. We're going to talk about trading. And unlike a lot of the other sessions that we do, this is designed to be a little bit more relaxed, longer form, and a little bit more of just a discussion. So if that's what you're looking for, great. I think you've came to the right place. If you're looking for something that more kind of just talks about indicators and shows a lot of chart, a lot of the other indicators on the channel work really well for that, or a lot of the other videos. In fact, we have several on Alex talking about MACD. So I want to welcome you guys all out. Maverick, thanks as always for saying the audio is good. Neil, good to see you. Frank the Tank, hello. We are going to start with a legal disclaimer. It keeps my attorneys happy. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to using and interpreting specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock, the Traders Forum LLC, and their employees disclaim liability for any investment decisions by investors based on the use of the software and trading strategies or any information provided in connection with the companies. MetaStock, the Traders Forum LLC, and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy the security. So just a couple things as we kind of get rolling. If you are watching this on YouTube and you haven't joined the Traders Forum, I'd like to invite you to come in and join the Traders Forum. We've got a lot of lessons up there. We've got guides. We have an active group of people that talk about the markets, and we'd love to have you be part of that. So I'm officially inviting you. If you want to join us, www.thetradersforum.com. Okay. Our guest today is Alex Spiroglou. Alex has won the Dow Awards for his indicators that he's created. The volume to adjust the MACD, which is kind of cool. Talk a little bit about kind of like what inspired him to do that and all that kind of good stuff. If you're a MetaStock user, I've got a link right here. We actually have a free version of this that's available. I'll make sure that this is in the notes and so you can get to it. This is MACD free. It's got the indicator, it's got a scan, and it's got an expert advisor. And that's it. I was trying to think of all this included. Alex has kind of just provided it as for the community, totally free of cost. And it's a pretty cool indicator, so you can check it out there. I want to talk a little bit about Alex. I've known Alex for a while now. We've been talking and working on MACD for a minute. MACD is basically what I believe, correct me if I'm wrong, Alex, it won the Dow Award. And generally, I would say that, would it be safe to say it's your favorite indicator?
Well, first of all, thank you so much for the invitation at the show.
For sure.
Also, very nice to be part of the Traders Forum, this nice little community you built here. And to come back to your question, I would say, well, as far as sentiment, emotionals are concerned, yes, of course, it is my favorite indicator. Although it's a bit difficult to distinguish between your children, because I've needed other indicators as well. So you ask me which child you like more. But, as you know, as a parent yourself, that, sometimes they're a bit more, we have a soft spot for some. But yeah, I think it's a very versatile tool, but extremely powerful. But that said, I want to make sure that people don't misconstrue it as the be-all, end-all of technical analysis, because of the various factors of price or of macro. It's just one piece of the puzzle. But if you put me on a desert island and put a gun to my head and say you'll just use one indicator, I would use the MACD. But luckily, I don't have to make that choice. So it's just one tool of the repertoire of tools that I'm using.
All right. Let's talk. I kind of want to back up a little bit and come back into MACD and kind of the other indicators that you've written. You're I want to kind of talk a little bit about how you got involved in trading, where you're from, all that kind of stuff. So right now you're joining us from Greece, correct?
No, from England. I was
Oh,
born in Greece,
okay.
living in England for about the past 20 years.
Okay. I should, I think I should visit you next time I'm in London. Are you in London itself?
No, I was to be in London, but my wife and I have moved to the south of England, the south coast of England, and I love the buzz of London, but I prefer the quietness and being the coast and having being in the countryside of the English countryside. So yeah, of course, next time you are in London, we've met a couple of times, had beers in London. So next time you pop by, feel free to. We would be love to catch up again in person.
For sure. Absolutely. And my apologies for confusing where you were or where you're at right now. Talk to me a little bit about how you got involved in trading.
Well, it's a long story in the sense that I started to look into trading before actually even knowing what it was, and that happened because my dad was working for Bank of America. Actually, he was in corporate finance, but for some reason, not for some reason, actually, he was working in Bank of America in Greece. So they decided to send him to do some training in London. So when he visited the London offices, he went through saw the dealing room, the treasury, the dealing room of Bank of America, and he really liked it. So when he came back, he said, "Son, I think this is a very good path for you to go down, becoming a trader." And as a young child, at the age of 15, 16, I didn't know better other than, just to say yes to my father because I wanted to impress him. So I said, "Yes, sure, Dad." Although I had no idea what it was. After that, I went to university, in City University in London. I did a bachelor's in Bank International Finance. I knew I wanted to go down in finance, but I just didn't know exactly where. I was drawn to markets, but again, I didn't have a very crystal clear idea. So after I think my second year, I started specializing from finance. I didn't want to do corporate finance, investment banking. I just wanted to do capital markets. So around the second year, I think it was around 1920,
Okay.
I decided that this is what I want to do. And during my final year, there was, I think that's when I discovered technical analysis and everything fit to place. Right. This is, I think it may be an interesting story. During the last year of my studies, there was an optional course called forecasting. Now, this course, forecasting, was taught by a gentleman called Roy Batchelor. Roy was a life trader, and then he switched to academia. So, having been a trader himself in the past, he knew of technical analysis. But at that time, when I say at that time, when I was in university, that 1995. So I went to university 93 to 96. So it was late 95, beginning of 96. Technical analysis was considered a bit of a heresy in the academic world. It wasn't as widely accepted as it is now. But he wanted to teach it to the students because he came from a practical background. So he did a bit of econometrics at the beginning of the course, a bit of econometrics at the end, and put technical analysis in between. So I took that elective course, and as soon as I started seeing charts and talking about Dow theory at the young age of 21, that's when I fell in love with technical analysis. It was literally love at first sight. And they said, this is what I want to do, and this is what I want to be using.
Okay. So technical analysis is where you kind of jumped in. You were initially working on with the Athens markets, is that right?
Well, yes, after that, I did my military service for a couple of years. Then I was working in Greece in various brokers and money management companies. And then I went to London, worked for a couple of hedge funds. Well, one proprietary trading firm. yeah, so I migrated from sell side to buy side of the industry. Lots of experience, lots of work with a lot of interesting people, including one of them was Navinder Sarao, the flash crash guy. I don't know if you remember when we had the flash crash.
I remember the flash crash, but I don't know the story of the flash crash guy.
Well, there was one gentleman who was actually blamed for having caused the flash crash. His name was Navinder Sarao. He was a trader out of the UK. If you look at the his name, well, Navinder and I were working right next to each other, not during the crash, because that happened a bit afterwards. But that was a very, very interesting. He was a prop trader. We were working together. Yeah, so during my career, met a lot of interesting people, and yeah, managed to learn a lot from very experienced members of the investment management community.
With the flash crash, is it true that it was really a fat finger mistake?
Well, to tell you that I think it's a bit of an exaggeration. I mean, basically, what happened is, again, this is my own personal opinion because they blamed one guy,
Yeah.
Navinder Sarah. I think it was just being an scapegoat for something that happened. It was so intense in such a short time, and because posed serious risks in the financial system. And I think the authorities would look a bit stupid if they didn't say, okay, we don't know what happened. And we didn't know whose fault it is. So I think they needed an scapegoat. And I find it highly unlikely that a guy trading from his parents' bedroom, to put it this way, caused such a problem in the global markets in the financial system. Now, that said, Navinder was a very, very large trader. But still, it's one individual. So I think it was a bit of a scapegoat.
For sure.
Hey.
What are you, what are you doing these days in terms of on a day-to-day basis? Or do you kind of spend a lot of time trading, creating indices?
Yes,
what
right.
are you doing these days?
Good question. Well, after having left the industry for deciding to trade on my own. So basically, what I do is proprietary trading. I have what I call a core and satellite approach. Basically, part of my portfolio, the largest part of my portfolio, the core part, is basically investing long-term trend following with ETFs. And there is the satellite part, which is short-term trading with futures. That's across various asset classes. The largest asset classes, for example, equity indices, bonds, FX, and also commodities. So this is what I primarily do, and I've been doing for this past years. I mean, basically, since when I started in 1998.
Okay.
Although the first couple of years of my career, I was a stock trader, then switched to futures. Initially, I did the Greek indices. I mean, it was just the Greek derivatives market has just started out, but then I switched to international markets and never changed. I mean, my style has evolved, but the market focus or the time frames have not.
All right.
So this is what I've been doing, and I'm also in the process of launching a trader development program. So hopefully, I've been passing on the few things I've known in the market since 1998.
So this is and the website for that is tradertd.com. Is that right?
Yeah, that was a URL I had booked some time ago, but I just have it for a few emails. The URL I'll be using is my name, basically, alexspiroglou.com. I've never felt comfortable, putting, alexspiroglou.com, my first and last name, and wanted to do something more. But when I spoke to a gentleman who's into marketing, he advised him, okay, since you have won a couple of awards, don't market this with a company name because nobody will know your company, but because you're more well known than your company.
Sure.
From a marketing point of view, I think it makes more sense to do, as he said, personal branding rather than corporate branding. So the company is called Smart Trader Systems, but instead of doing smarttradersystem.com, I've got the URL, but I'll be passing over as alexspiroglou.com.
Okay, very cool. From a perspective of the trading that you're actually doing, you say you're doing a lot of equities. About how much percentage do you think, just a guess, is allocated to equities versus other instruments like Forex and futures?
The largest part of the mass portfolio, which is the core part of the portfolio, is about 60% in cash ETFs.
Okay.
So the core part of the portfolio is long-term trend following using ETFs.
Okay.
Then I have the rest 60% of the portfolio, which is allocated as 30% margin for futures and a 10% for cash. Now, obviously, the 30% is, again, divided for short-term futures between strategies, but that's the allocation I have just for margins.
Okay. When you do cash ETFs, are you talking? What type of ETFs are you typically doing? Are you doing American ETFs? Are you doing European ones? Kind of give me an idea.
Yeah. Primarily American ETFs, because the underlying instruments are, again, well, let me put it this way: the markets I follow are pretty much standard. I mean, major futures markets. So the themes I'm trying to catch are either through short-term trading with futures or long-term trend following with ETFs. So the underlying markets are the same. So it is primarily US, although not exclusively. For my trend following, it is mostly US product.
When you look at long-term trends, are you typically looking primarily at indicators? Are you kind of going, okay, well, here's kind of, do you make a fundamental case for what you're trading, or do you use just a technical approach?
No, I try to merge market and macros. When I first started that, it was purely a techie. But I found that there was always something missing, because technicals are very good at answering the question when, but they're not very good at answering the question why. So that's why I try to always at the need to incorporate macro and fundamentals, because fundamentals are more predictive, but they're not very good for market timing. So I think you need both, and it's better to merge both, because if you need just technical analysis, there is a lot of noise in that movement. So a way to filter out the noises through macro, the interaction of this. So try to use both technicals and macro. And the factors, if you want to see, maybe I'm jumping the.
No, you're perfect. That's exactly what I was going to ask you. What do you
find macro? Right. Okay, good. The 4 factors I look for technicals, and 4 factors I look for macro. For macro, I lose commitment of traders report. Actually, the first one is I look at the business cycle.
Okay.
My work was heavily influenced by a gentleman who I managed to meet at some stage and call a friend, by Martin Pring. Although not exclusive, but I think Martin was the first influence I had, although John Murphy has done a lot of work. So look at the business cycle that gives me the big picture of where asset classes are. Then go into commitment of traders report, something I learned from my good friend Larry Williams. Then I go into sentiment, and then seasonals. So these are the 4 factors. And all of these, I look at the weekly chart. I may go to the monthly to look at economic statistics, but by and large, this is what I call, multiple time frame, multiple factor trading, because I first look at these as my setup. These do not have market timing value, but they provide directional context. So for example, if I have bullish setups from an intermarket point of view, you may have a bullish setup on commitment traders point of view, seasonals or sentiment. So I look at these 4 factors. I don't need all of them to align. Hardly all 4 of them. Some may be bullish, some may be neutral, but I just need 2 of them to point at the same direction. So if I've got these on the weekly chart, or set monthly if I want to look things like employment and inflation and economic statistics, basically anything that gets announced on the monthly time frame. So if everything lines up there, some of them line up there, then I go to the daily chart and look at the 4 factors that I follow for technicals, which is trend, momentum, volatility, and relative strength.
Okay.
So, I do this in the form of a roadmap. So the 4 factors I look at is the macros, then I look at technicals, and then I go into what I call the 4 S framework, which is setup, signal, stop, and size. And basically take the technicals and the fundamentals and put them in form of a trade.
Going back to actually, I think definitions are really important when you start talking about stuff. And so what I want to ask you is, like, when you say that you're looking at a longer term perspective, can you tell me what time that is on average?
For the weekly chart, this can be, it depends on the trend. It can be anything from many weeks to many months. It depends. The core part of the portfolio for the long term is divided again in 2 parts. One is the equity ETFs, because there is an upward directional bias for equity indices. And I'm talking about indices again, not individual stocks. So these tend to hold for a long time. They can hold on for months, if that is. I mean, it's not necessary, but it can hold if there is a good trend. So the largest part of the half of the part of the core part of the portfolio is equities. Then I also look at bonds or other types of ETFs, which may do a bit of trend following. This is, of course, fundamentally filtered trend following in the sense, okay, let me give you an example. For example, in one of my equity ETF programs, the signal may be something very, very simple, like for example, a moving average crossover. If you try that, it won't be awfully good in terms of performance, but if you fundamentally filter it, for example, I may require that bonds are behind their moving average, short-term interest rate, red. So I fundamentally filter the trend following part of the core part of the portfolio, if that makes sense.
It does. When you say index ETFs, are you talking primarily like Dow, DIA, SPY, QQQ, those types of index ETFs, or is it a little bit broader than that?
No, I didn't. I just stuck with the S&P 500. I haven't diversified. I prefer to diversify across regions. I haven't found much benefit in, say, looking at the Dow or the S&P, because that's just equity exposure. But where I found more value, if you diversify not against the S&P versus the Dow or the Nasdaq. Of course, the Nasdaq is a more leveraged, if you will, version of the S&P 500. But if you diversify across regions, so for example, if you have emerging market exposure, I think that's a bit more interesting rather than just diversify across the US.
Okay, I gotcha. What do politics play a role? You might have heard we had a little bit of an election over here. Does that affect anything that you're doing with your investment style or kind of your ideas in terms of what the market?
No, it doesn't. It doesn't, because everything I do is either the core part of the portfolio is systematic. The satellite part of short-term futures trading is semi-systematic. It's rules-based discretionary. So I don't look at the news or politics. That doesn't mean that don't shape economies and then price, but I can't quantify. I can't, and I won't jump the rules just because of that. And in general, try to avoid discussions about politics and religion and sports, because I have never, not that because I don't have an opinion, I've just never managed to convince anyone, and no one has managed to convince me. So I think everyone's got their opinion and they stick to it. And so I try to avoid it, definitely not bring it into.
Oh, for sure. Yeah, definitely. I find that's what Facebook is for. No, I'm just kidding.
It's a very good point.
You'd mentioned commitments of traders a little bit earlier. Do you use that for like the index markets as well? Because I know you can get reports on that. Or do you primarily use that for commodities?
That's a good point. Not as effective for commodities, so for stock indices, but if you create composite of all the equity indices into like one composite COT indicator, then the results are much better.
Cool. I never thought of that. In terms of this commitment of trader report, actually, let me come back to that. What type of futures are you typically involved in or invested in?
Across all asset classes, if I understand the question correctly. I mean, both FX, commodities, fixed income, G7 primarily, and also equity indices as well.
Okay.
That's the question.
I was kind of more thinking about, like, are you looking at, in terms of the commodities themselves, are you looking at all of them? Are you looking at oil? Are you looking at grains? What type of commodities?
All of them. All of them, as long as they're liquid.
Are there?
But also, okay.
Go ahead.
I'm also trying to diversify a bit more across more arcane markets.
Mhm.
But the main ones is definitely on the monitor. Well, from an intermarket point of view, you've got dissected the economy in 10 different sectors. So you've got 4 asset classes: equities, FX, commodities, and bonds. But across the commodities, I don't tend to view commodities as one family, because there is a lot of different types of commodities there. We've got different fundamentals. Some are more supply influenced and are more demand influenced. So, for example, a lot of the agricultural commodities are primarily, although not exclusive, primarily more supply influenced. For example, they're more weather affected. So you get the droughts or other types of shortages. This will affect price a lot more. The behavioral patterns, the consumption patterns are not that much different. I mean, you can only drink that much orange juice, if you will. But weather conditions do affect the price a lot. And then you've got more demand-related affected commodities, and some of them more linked to economic activity. The classic case being copper. Politics, as you mentioned before, that affects a lot crude oil. So I don't tend to view commodities as one big family, but as in different sectors. So if you add these sectors, and of course, equity indices, FX, and bonds, that's 10 sectors. So I tend to use this as the whole 10 as part of the economy.
When you start to talk a little bit about the commitment of traders report, is there parts, because I know that you've got like the manufacturers, the producers, there's a lot of kind of different categories. Are there categories that you pay attention to versus not pay attention to?
No, I stick with the legacy report. I haven't gone into the disaggregated one. That, of course, doesn't mean that because I haven't done it, there not may be some value there. It's just that I haven't found any patterns that I couldn't find with the legacy report. Maybe people will be more successful if they go down that route. I'm not saying my way is the way, but I'm stuck with the legacy report because I found it's very good. So I tried to created a few indicators, if you will, or techniques around, because as you probably know yourself, it's not very good from a timing point of view. So how I can pinpoint it a bit better, help me with timing a bit.
Cool. Do you have a general feeling? Do you have a general outlook for the market? Let's say between now and the summer. Do you feel like we're going to kind of remain kind of volatile? Do you think they'll go up? Do you think they'll go down? Or are you just going to? I mean, we all wait for the market to tell us what it's going to do, but do you have a general sentiment around the market?
I think it's going to go up and then down, but not necessarily in this order. My prognosis, my forecast, my market forecast, let's say, are just probably around average, just flipping a coin. That's why I try to follow the rules.
Mm-hmm.
I found that by following the rules, my market views are getting better rather if I don't do it without them.
Okay, right, sure.
So I generally try to avoid having a market feel. I mean, it's not consistent enough. Sometimes I may get it right, sometimes I get it wrong. But even if I do get it right, it doesn't necessarily help me with the timing of the trade. For example, if I say, okay, I'm bullish on the market, okay, but where do you get in? But still, even if I get it correct, it doesn't, it's not I get it 80% or 90% right, far less than that. It won't help me with the timing. So then I still have to rely on my tools. So I prefer to be what I call semi-systematic or rules-based discretionary, which means if the trade is broken down in 4 parts, as I mentioned, the 4S framework: setup, signal, stops, and size. The setup is rules-based discretionary. But what do I mean by that? So, for example, I've got my indicators for, as I mentioned, seasonals, commitment of trader, and so on and so forth. But I will look at this and then say, oh, I'm bullish of the market based on the data. So I will have a directional bias. The signal will be fully systematic. The stop will be fully systematic. And the size, again, will be a bit discretionary based on how bullish I feel of the market.
Okay.
Of course, you can quantify other factors. For example, if I'm taking a trade with a trend, you have a bit more size, or if you're trying to do something counter trend, which is not always very smart, but you may have a strong view on something, you can cut half your size. So the first and last part of my trading methodology, if you will, has an element of discretion. Signals and stops are fully systematic.
Let me kind of step back a little bit. You had kind of mentioned Martin Pring earlier. Martin Pring's a good friend of MetaStock. He's great. I was wondering, who would you consider kind of the people that have helped you be a successful trader?
Larry Williams, Tom DeMott. These are the top 2 ones.
Okay.
We're proud to call them friend. John Bollinger as well. He's helped me a lot. Actually, John, he was the one that had the direct effect on my life by, I don't think we've mentioned this, but in 2010, I think, if memory serves, I was asked to become the chairman of the UK chapter of the Chartered Market Technicians Association, which is the largest technical analysis association globally. At that time, it was called MTA, Market Technicians Association. And John was the one that, because they were looking for someone in London to head the chapter, and John was the one that suggested I head the chapter. And that was the event in my life that kind of put me on the map, if you will. Now, after that, there were other events because based on that, I started doing presentations and then the awards. But I think that was literally the event that put me on the map. And so John was another person that has really affected my life. Linda Raski was also someone I've met in London, and her husband, Damon Pavlatos, who was also a fellow Greek. Lots of people who I've met over the years, Ralph Vins. I feel a bit bad now because I may forget names.
How does that right?
Also, as I mentioned, my university professor, Roy Batchelor, who was the one that, if it wasn't for him and that forecasting course, I wouldn't have bumped into technical analysis. Maybe I would have, but maybe at a later stage. Also, there was another name is Peter Pondikis, who is the chairman of the Australian Technical Analysis Association. Again, I was a fellow Greek. He was my first tutor because when I started, again, I was 1999, I really wanted to take an accreditation course. And he was my first mentor because I did the Australian Technical Analysis Association diploma. That was the first one. Then I did the IFTA one. So he was also a mentor. And also other people along the way, which may not have that big of an influence, but they did influence me, maybe through their book or advice. So that's why I don't believe in the term someone who's a self-made millionaire or self-made entrepreneur or in general, the term self-made, because you always have help of people. Of course, my parent, wife, perhaps I should have mentioned this first, but I just kept it on a professional basis. So lots of people have helped and influenced me.
Cool. What was the first indicator you developed, and what was the motivation behind creating your own indicator?
Oh, I don't, to tell you, I've created so many. I don't remember which was the first.
Okay.
That's a good point. I don't remember who was the first, but I can tell you the story behind the Mac TV, the most well-known one.
Yeah.
Because, as I mentioned, I'll be releasing almost everything I've done over the next few weeks, and I'll be creating courses around this, and I'll be giving these away for free. So the Mac TV was actually I started wondering about in 2014, because at that time I was looking at momentum indicators, and there were literally thousands of them. There were probably more momentum indicators than traders. So in order to decide, because I have a very curious mind in terms of not just plotting it on the chart, but I also want to look at the math behind it and trying to understand what the event or why he formed that that particular formula. I found that a lot of them were very, very similar. So I created a taxonomy of indicators, momentum indicators. I'm sorry. And they came into broad categories. One was range bound, and the other one was unbound indicators. Range bound like the RSI and the stochastics, and the other one unbound like the MACD or the rate of change, and so on and so forth. And each one had its own pros and cons. So I was always stuck between using indicators from one category and then the other one. Because for trending environments, range bound indicators were getting pegged at high levels, getting stuck at high levels, and they weren't quite good in depicting momentum in high trending environments. Unbound indicators were, of course, not good because their value didn't make sense across markets. So I was always having these issues. So around 2015, I said I have enough. Maybe I'll try to create an indicator of my own, which has the best of two worlds. I mean, it's got normalized readings like the range band indicators, which you can use across markets and time frames, and then have it be unbound like the unbound indicators. So that's how my journey began. So I thought my idea would be I'll take an unbound indicator and then try to normalize it. And if I did that, I would have the best of two worlds. And I took the MACD from Gerald Appel, normalized it by price initially. Of course, someone else had discovered that before me. The PPO indicator or MACD percent goes by a different name. And I wasn't too happy with the normalization. It was working for each market individually. It was normalizing across time, but across markets. So I decided to look into it. Why does this happen? Because it creates a percentage value, and logically speaking, a percentage should be the same. 5% should be 5%. If you compare it across markets, there shouldn't be any reason why 5% in one market should be 5% different in another market, because it's on a percentage basis. Well, apparently it wasn't, because some markets are more volatile than others, and a 5% move in one market is maybe small, and a 5% in another market may be big. For 5% in effect in fixed income markets is very large. 5% in Bitcoin, just the guy sneezed, then you get that. That's it's called Tuesday. Excuse me, right? So volatility was the determining factor that percentage normalization didn't work. So I thought, okay, so if that doesn't work because of volatility, let's try to normalize with volatility. So I did that, and I found that it solved a lot of problems. So 2015 was my eureka moment. Actually, it's nothing about it. 10 years since then. Time flies. And so normalized it. I started using it, created a lot of patterns based on, because it opened a plethora of opportunities, because now you can compare the MACD across time, across securities. It had a lot of advantages. So for example, you create setups and patterns with it, which you couldn't do with a classic MACD. You can't. For example, you can see if the MACD is overbought and oversold, but you can't define overbought and oversold the same way across markets. Or if it's going fast, or have a numerical value that makes sense. So for example, with the RSI, if it's 80%, it's at the upper region. So, but with the MACD, you didn't have that. So with the MACD, you do have that. It's above 50. It's it's trending fast. So it opened up a lot of opportunities for creating pattern recognition setups. So that was quite helpful. I think that was the main one. I mean, the most well-known one. Other indicators I've created for commitment of traders report, I've managed to filter them because one problem I had with the commitment of traders report was that the counter-trend nature of commercials was prevalent in the markets, and you could see that they're heavily influencing the markets. I mean, but because they have deep pockets, it's very difficult to pinpoint the turning points of their of accumulation and distribution, because this is what they do. They accumulate and they distribute. So if a market is falling, they accumulate because for them it is lower cost of production. Because you'll either have producers or consumers of a commodity. So if the market is falling, you will primarily have the consumers more active, because for them it's a lower cost of production that will do most of the hedging. So if the market is rising, it's good for the producers because they're selling against that. But you can't pinpoint it's not good for market timing. So I had to think again, why does this happen? I mean, you have conventional indicators who get again pegged at high levels, and they give you overbought or accumulation readings for a prolonged period of time. So you have to make some assumptions and adjustments, and you can give it a lot of market timing value. Now, when I use commitment of traders report on the weekly chart and say, okay, this is a potential turning point, I don't buy. What I do is I go to the daily chart and then look for buy signals from the actual price itself. But helps me locate when I say, now switch to the daily chart. So kind of like in loose sense, does have a market timing value. I've made it have a market timing value, but I always get the confirmation from the price chart. I won't buy just because I bought a buy alert or a signal on the weekly chart. So this is another indicator I've created. For the business cycle, I primarily relied on Martin Prink's work. I've made some also improvements, if you will, including the dollar, because in his business cycle model, he just uses 3 asset classes. I've tried to add the dollar as well. For seasonals as well, I've made some, again, because it's a very tricky subject, seasonals. Primarily, not so much in the indicator itself, but on the techniques, how to use it. Sentiment, again, created my own sentiment indicators. So there was, I think the main point is to study what's the bibliography, what are the indicators, what are plus and minuses, and try to address this, sort of like I did with the MACD and the MACTV.
Where do you feel, okay, you've kind of mentioned business cycle a couple of times. Where do you think we fall in the business cycle right now?
Right now, it's on stage 3, according to Martin Prink's business cycle model, which is bullish for equities. But then again, it's the business cycle is not exactly forecasting. It's what it does. It's nowcasting, because basically you take the trend of the major asset classes, you identify where they are, and then you identify which part of the business cycle you are, and based on that, you calculate some historical probabilities. So based on these probabilities, you say, by and large, this is what should happen. So this is what the business cycle is currently saying, that we're in a stage 3, which is bullish for equities.
Talking a little bit about coins, you brought up some coins. What do you think the future of coins looks like?
Are we talking about
like Bitcoin and Ethereum and Dogecoin and all those things?
That's a good question. I really don't have a view on. I think they're a great trading vehicle, but from looking at from a more macro point of view, what will happen, I really don't have a clue. I mean, I know there are very heated opinions on both sides. You've got your Bitcoin fanatic who just think it's the best thing since sliced bread, and then you people who are completely um, dismissing the whole idea. I really don't know. I haven't got a firm view on what the future will hold. All I know is that from personally, I don't use Bitcoin in my daily life. Maybe I'm too ignorant, but can't find any value. I know that I will get stoned probably by Bitcoin people for saying this, but I don't use it in my daily life. So and I've always used cash, and then with its credit card. So I didn't find the need for paying Bitcoin. I was doing my job fine as it was. But maybe I'm too old. I'm just yeah. I entered 50. Maybe I'm too old for this, and people in their 20s need to. But we'll see. I mean, to tell you the truth, I mean, I see a bit of signs of a mania. Everyone's getting everyone's commoditizing. They're making products about it. I'm getting a bit of reminiscent of the things we saw in 1998 when I first started with internet stock. And I mean, it kind of reminds me of that era. Of course, I could be wrong. So because I've been wrong many times in my life, that's why I follow the rules and makes my life simpler.
Welcome to the 50s club. I just hit 52. So, are you gonna 70 or 51 this year, or did you just hit 50?
I just hit 50. Yeah, just hit 50. I'll be 51 this summer.
So far, I'm going to say my 50s have been awesome. Gary has a question. He wants to know, have you written and developed your own data collection and analysis software using something like Python, for example?
Data, I don't think you can get any better than the ones you have in MetaStock.
Oh,
it is the best source. It's a very versatile and a very easy to use software. I would highly recommend it.
I'll send you that Fiverr later.
Thank you so much. I'll take that. I'll take that in the form of a beer when you come to London. And what I really like about MetaStock is that the language is very easy to learn. So basically, if you just try to learn a bit of Excel, you can learn a bit. The help is fantastic. People from Jeff and Bobby, I mean, they're always so helpful. So yeah, I would get the data from MetaStock, and then of course, no software can replace the work you do with. I mean, it will help you flesh out your ideas. It won't give you ideas. So you need to do a lot of work, speak with creative people, speak with people who are more knowledgeable. I've always done that. And hopefully MetaStock and the data database they can help you out.
You talked a little bit about creating a course and kind of putting together a course on your website. That kind of gives me a question that I usually try to ask most people, because there is a lot of people that kind of jump into the market and try to act like cowboys and all that kind of stuff. What do you feel is like the main obstacle for success in trading? And what is your advice to maybe a new trader?
Well, that's a good point. The main advice. Well, I think there are two types of people. Because I think I think you touched upon 2 points. Either the cowboys who create courses, if I understood this correctly, and the consumers. So let's touch upon the consumers, and then we'll talk about the providers, if you want to. I think that as far as consumers, I mean, the people who want to learn how to trade, there are two types. Those who don't want to run the mile, and those who want to run but don't know in which direction to run to. So my intention is to help the second, not the first one.
Okay.
So how do you distinguish between the first and the second group? And also, how do you establish yourself as someone who's not to put it more directly, a snake oil salesman? So my idea of creating something that is completely different, I mean, to my knowledge, I have not seen it anyone else doing it, but I'll try it, and you'll know about this on the TickerTalk show first. Shoot. What I'll do is I'll give the course for free. I won't be selling a course, and I will not be selling information, but implementation. So what I'll do is I'll create the course, I'll give it away for free and say, guys, this is the course. It will be completely transparent. I won't be trying to sell it all. This is, you have it, see it. And if you want to jump in and have implementation, then come to speak to me. And that way, I will be able to differentiate between people who don't want to run the mile and those that want to run but don't know which direction. Because the first type usually are more information gatherers. They just, course collectors. They don't implement. The second group are got a more hands-on approach. For example, I learned this from because I was asked to publish a book. So from having discussions, I was told a very weird statistic. They told me that from the people that buy books, a large percentage of them don't finish the book.
Okay. Yeah.
And as only a small percentage will finish the book. And from that percentage that finishes the book, only even a smaller one will go to implement it.
Mm-hmm. I can see there's a lot of books that I haven't started because they're just, for the most part, for different.
Yeah. Actually, and not only that, I mean, I won't even go to the theory of that, because my attitude towards book is a book that is not read 3 or 4 times is not even worth reading once. So that's another subcategory for people who read the same book 3 or 4 times. So this is the crowd that I'm really interested in, the people who finished the book, if you will. In this case, it will be the course, and they want to implement it. And they say, okay, I like it, looks good, it's very transparent, so let's jump in. So that's the first thing that will differentiate. So make sure I work with people because I don't have the patience, I won't be doing this full time, to work with people who really want to work. And the second thing is everything, of course, will be rules based, so there won't be any kind of discretion in terms of like interpretation, if you will. And another thing that I will be differentiating is that I will be doing this in a community environment rather than a one-to-one solo sort of send me an email and I'll reply back to you, because I think we can all learn from each other, both asking questions, not just providing answers, but just asking questions. Someone may ask a really clever question, something that we had not thought that we didn't know, we hadn't realized. Also, the communal aspect of trading I like, because it's a lonely job we're doing, unfortunately. And so this is how we'll differentiate. Everything will be for free, it will be completely transparent. If you want to watch it, fine. And if you are, be serious, come and join us.
So what do you do? Okay. What do you do when you're not trading? What do you do to relax? What are some of the hobbies you've got?
The hobbies would go on. My wife and I like to go out a lot. I mean, because we live in the English countryside, it's very beautiful. So we go out for long walks. We also like to travel a lot. Also like, so when we do these outdoor activities, seeing friends, also like reading. And as my wife sometimes teases me, she says that that markets is not just my job, is also my profession. Sorry, not my job, is also my hobby. So I like reading about trading as well. I find it relaxing. And also I like to read other subjects outside of trading, because it takes my mind off of it, helps me clear a bit. So my social life is pretty, it's pretty good. But what I do, I don't have an extravagant. I've tried a lot of things, a lot of hobbies, but I haven't stuck with anything. I've done photography, sports. I try to do. Whoops, sorry, that was a.
Okay.
I have now that I've entered the 5th decade of my life, so I have to.
Yeah.
on my fitness a bit. So I'm started doing swimming.
Oh, okay, cool.
Yeah, because I don't think my joints are strong enough to do basketball or anything else like that.
Yeah, swimming's a great way to get started for sure.
Yeah. I mean, I don't want to leave my limbs all over the place if I do anything. So I started doing a bit of swimming. I try to go 3 times per week. So yeah, that's it. I mean, nothing too impressive, too interesting, some weird hobbies or, but seeing friends, spend time with my wife, families. Yeah, that's it. And traveling.
Nice. Okay. Okay. What is a good question for the next guest?
That's a good question for the next guest.
Yeah.
Why did you start trading? I don't know. That's
Okay.
the question. Why did you? How did you? What's the? Why do you do what you do?
Why do you do what you do? Okay, that's the one we're gonna go with. Here's a question that was left for you. What do you think is more important in trading? Is it mentality, trading psychology, or something else, and why?
I think it's a mix of everything. Some parts may be more important than others, but you can't. Although you may say that's more important than that, but you can't just have just one. So I think it's a mix. It's the balance of which is you prioritize. So in order to highlight this, and which thing is more important, because it's not just which is important, but it's also how it is sequenced. I created this trader development framework, if you will, which is the acronym SMART. So SMART stands for the 5 stages of trader development. The first stage, which is the S, is self-awareness. So basically, you have to answer to yourself, why do I want to start trading? That's the basic thing. Is it something just for the money, or is it because you like it? I found that people who genuinely like it are more successful because they can sustain the bad periods. They have what called the love of the game. Michael Jordan actually, don't know this, but in his contract, he had a love of the game clause, which allowed him to play basketball wherever he wanted. And what I've noticed is that with a lot of successful athletes, or they always said, although they've made a lot of money through what they do, they would all do it for free. So first question I would ask, okay, so you may be attracted to this for financial reasons, but would you do it for free or for a very low salary? If the answer is yes, then I think you're on a good point. I'm not saying to do it for hobby, but must like it enough to say, okay, that's not my primary motive. So the first is S is self-awareness. Then I would ask them to evaluate what I call the 4 sources of capital that a trader has. And that's obviously the financial capital, see how much money you have allocated for that. The second is the time capital, because time is money. How much time you can devote to it. The second is the emotional capital, because you can run out of that as well. And emotional capital is both your personal, what you're good at and what you're not, and also your support environment, because that will also play a role. For example, someone wanting to trade, they must have the support of their spouse, because that can play a big role, their support or not. Also have a mentor, because page 58 of the book will not tell you what you did wrong. And also in the last part, you've got your educational capital. How much you're willing to accumulate. Are you a person who like learning new things, is open, or are you stuck in what you think? Because I've noticed this a lot of especially private traders who do things a bit DIY. It's very difficult. I mean, some people are how can I put this? It's easy for them to learn, but it's difficult to unlearn. So if they've picked up a bad habit along the way, it's very difficult for them to get out of it. So I think that's you can look at other parts as well, but these are the primary parts of the self-awareness of the SMART framework. Then I'll go to markets. M, market knowledge. After self-knowledge, you get market knowledge, which is divided, of course, in macros and technicals, as we mentioned before. A is the action plan. How do you bring this into a trading plan? So the S is basically the business plan. The A is the trading plan. R of the SMART framework is a repeat and review. I think this is the most undervalued part of trading, which is implementation, because most people are unfortunately got the idea that give me a setup or a strategy, and it just doesn't work that way. And it doesn't work for the same reason. Like, for example, if I give you a treadmill, you won't get thin because you actually need to start running on it. And so you need to actually start trading it, but you also need to do it in a supervised fashion. Someone provide feedback. And also, you also need to do it on a safe environment, trading on a demo. I know most people don't want to do the demo or the sim trading accounts because they say it's not the real thing. And my reply to that is usually you get 80% of the experience with 0% of the risk. So you have to have that, and also you have to have criteria for when to go to live, and that's the T, trading live. And then from that, you can see if you want to be doing it for a career, part-time, and so on and so forth. So there are a lot of steps. So my advice would be, depending on where someone stands on this 5-stage framework. But supposing someone is just starting now, I would just say, what's your motives? What's your why? And let's, sit down and evaluate, how much capital you have to this, what's your risk framework, how much time you have. So these are, the basically business plan.
Cool. All right. We go ahead and just I want to reiterate a few things. Up here, I'm going to share my screen again. Let me do this. We'll share this screen. And just from a perspective of, if you want to get the MacDV, it's available on the website. Here's the link. Again, I'll make sure that if you're watching this live, it'll be in the show notes. Or in the description on YouTube. There's a little bit of an install file, completely free PDF. Alex is going to be creating some coursework to look at this. You can go to alexspiroglou.com.
Yeah, it's still under construction, but we will be putting it in the traders forum. I'll be putting the material there, and I'm really happy to be doing this. I'll be sharing the work, and then hopefully can also do a more advanced version. Because as we mentioned previously, the MacDV was developed in 2015, but since then I've done a lot of work which is undisclosed, so we can package it up in an indicator, and then perhaps if people are interested, they can get that.
Sounds good. Alex, I want to say thank you for spending an hour with us. Appreciate you.
Was it an hour? I didn't. Time flew.
Right now, it's an hour and 3 minutes and 30 seconds.
Time flies when you're having fun.
Yeah, there's a little timestamp there. Great. I look forward to getting some of the training back from you. The indicator is awesome. I was playing with it as we were, of course, helping get it polished up and ready. Great work with it. Good job.
Thank you so much. It's a pleasure working with you and everyone in the Traders Forum and the MetaStock community. Thank you so much. I hope you found the discussion and the indicators interesting.
All right. Thanks, Alex.
Thank you so much, Jeffrey.
Thank you, everybody, for watching. I hope it was enjoyable for you. I hope you learned something. I'll see you again at the next one.
Bye-bye.
Bye.